What's good, boys? Bit of a later video. We've been active since 10 a.m. New York, as you can see, but we have been doing other work. So essentially what this video is going to be, we did not take a trade. However, we are going to do a price action review, which we explained to the Discord on why price moved. We're going to go over just what happened at 9:30 market opening bell until a macro until TPs. So here we go. MES and MNQ. If you trade Forex, don't really know what you're looking at. Let me actually get rid of this. There's no way you haven't heard of NASDAQ, but essentially you have NQ, ES, and all the M at the start means micro. So if you come on to, sorry lads, if you trade with the CME data, you come onto markets, come onto, well, you've got your minis here, and then you can find your micros as well. There you go, micro right here. If you wanted to trade the minis, then you've got it. Right here, I'll show you the difference. So micros, obviously the bigger ones, mean that each contract is worth $5, aka each tick is £1.25, not pound. one 20. How do you even say it in dollars? $1.25. Am I bugging out? $1.25. Yeah, I suppose you could say that. So so in Forex it's pips. In futures, the smallest movement you can make is a 0.25, aka 1 movement. Let me zoom in, because there's way more. There you go. So the smallest movement is 0.25. There's one tick. And if you have 4 ticks, that's a point move. So from 44 to 45, that's 4 ticks, because it's gone to 0, 2, 5, 5, 7, 5, next number, 45. And that is a 1 point move or 4 ticks. Don't know why I'm explaining CME contracts to Forex, but I haven't recorded a video now in a while, so why not? So yeah, essentially you come onto the CMEgroup.com, go to markets and find your contracts. NASDAQ for micro e-minis. 1 pip, 1 tick is worth 50 cents. And then you come on to the minis, which is the bigger contract. 1 tick is worth $12.50. you come onto NASDAQ, one tick is worth $5. So essentially you're trading the same price, but for each pip, each tick, it's less. So instead of calculating lot size with like lots, this is fixed to ticks, and then to essentially to risk less, you just have to have the micros. Because if I wanted to trade the micro NASDAQ, if I had a 4 tick stop or a 1 point stop loss, that would be a $2 stop loss. If I had a 4 tick stop loss or 1 point stop loss, that would be $20 on the minis compared to the micros. So yeah, I don't know why I'm waffling, but yeah, I'm recording a video in a minute, so I've still been active, but I just haven't recorded much. And another main difference is I'll just keep the same title as like I'll keep the same title of the price action review because we are, but we'll just get into this a bit. So obviously, let me get to Wednesday. Another big difference is the new, well, it's not the new day opening gap because that happens at 6, 5 to 6. It is the opening range gap. So from the close to the open is our new day. Well, new, it's weird because you've got new day opening gaps and you've got opening range gap, but it's easy to say the same, especially when you've just transferred over. Anyways, that is the wrong one now. So you want to do the close to the open to mark out your quadrants. Let me actually put this on the left. I feel like it might be cleaner. That's ugly. That's alright, I suppose. So yeah, what you want to do is mark that out. What you then want to then do is mark out your macro time. Bang. And then we'll get into the rest. So essentially, you want to come on the market at 9:30 to mark up your new, not new day, your opening range gap. As you can see, I'll get this precise because, okay, so it's 43 and a quarter. There you go, precise now. Cool. Anyways, as you can see, you want to get on 9:30, mark out the close of 4:14 to the 9:30 opening. Now it can get a bit confusing to mark when this is this is the easiest one to mark because it's the close. But then if you have an open here for a bullish, it'll look weird because you've got to mark it from there, but that's just what you got to do. I'll see if I can find an example. I know this is not what you want to be watching, you just want to watch the price action, but I don't think there wasn't really one for the October the 30th. Okay, never mind. We can't find one for the past 2 days, that's fine. 10 minutes, to be fair, I don't really mind. Yeah, so essentially you want to come on at 9:30, the opening bell, mark out your opening range gap. You obviously want to wait for your macro. You can use this in itself as a model. However, I would rather wait for the macro time. Just because it has a lot more meaning to just the first 30 minutes. The first half an hour from 9:30 to 10, but the macro is the sort of, I don't know, it's just setting down, and then as soon as you get your macro, really, that's when price starts moving. So you'll probably see your Judas swing here to align with the macro. Anyways, we can see 9:30 we come up and we push down. Body's respecting the 0.5. What did we see? Well, we didn't see it until late. However, here's what happened. Now we can see we've got buy side liquidity, sell side liquidity right here. If we look on MES, we've got the same buy side liquidity. Why is this a valid? Do I want to just give this out? Okay. I'm watching a lot of Blasian. Okay, watch this video and I'll tell you to start watching. Watch from about 38 and you'll understand what I'm talking about. Anyways, we get SMT here. So with the buy side, sell side 11.15, we take that out. And then MNQ 11.15, we do not take that out. Now this is a key sign. This was a valid SMT, and if you go and watch the video you'll know why. I'll give you a quick hint. That's your quick hint. So yeah, we had a valid SMT right here, as you can see. NQ didn't take the low, MES did. Now, if we look at the exact time, to get a mouse map for real. As you can see, we take this out. I'll put a line. We take this out 9:39. And obviously we don't take this out. Now, knowing that we've got a bullish SMT for Nasdaq right here, prior to the macro coming up, it's quite a clear indicator that, okay, we've taken out buy side now. What can we use for our confidence? What is the strongest confidence in my opinion? Is it a 1 minute change of state of delivery? No. Would it have worked? Of course it would have worked. But that's only short term. If you wanted to take that just off that, then go for it. Stop right there, maybe a tip below. You probably pay yourself a short term swing. However, you wait for your macro, 9:50. We go on to the 5 minute chart. So our draw on liquidity now is buy side. Reason being, Okay, our reasons being ES took sell side, NQ didn't. So we've got bullish SMT for NQ. We're about to get on to our next reason. Now this arguably is the strongest confluence in my opinion. Now you notice how we take this out. Now let me show you now on the 5-minute time frame. So we take this out at 9:35. Wish I had a screener, man. 9:35. So technically we had the SMT at this one, and we then pushed lower, sweeping out more, sweeping out this low. Now, if you was on the 1-minute chart, seeing that we took it out at 9:35, I'll put a line there. I'm probably waffling right now, but I don't really care. So obviously we take it at 9:35. However, if we watch all these bodies, got all these up close candles, and then bang, we then close above. The whole rundown, none of these down close candles are being closed above. This one didn't, this one didn't, this one didn't. We get a 1-minute CSD. Now that's cool, but it's not enough. We'll also show an MES. So as you can see, we take it out here. We don't get a close above, don't get a close above, don't get a close above, blah, 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 blah. Bang. Now we don't even touch this. We might touch it to the tick. Okay, so the opening is 572, 575. The low is 572, 575. So we literally touch this to the tick. So we get that 1-minute CSD on both. Well, we close above. This touched it to the tick. NQ touched it. We touched into it. We didn't. No. Oh, we did. Okay. So we had 7 points into the CSD. Reason being, it's only a 1-minute CSD. It's not really a high time frame CSD. However, it is a big indication. We can also show our quadrants. We do. It looks like we touch. Yeah, so we touch. We reach down into the CSD and we touch the lower quadrant right here, and then we bounce off of it. So you could have had, well, either buys from here if you really wanted. You'd probably put a point or something, just because it's a risky entry. If you was buying this 1-minute CSD, you wouldn't have put it on the top. You would have wanted to buy the upper quadrant or the consequent encroachment. You could do, but it's a 1-minute, so you want precise entries. This one provided, well, literally the top quadrant well, I won't get on to why we would have took it there, but 10R. And this is not unrealistic. If you look at any of, well, Blasian's trades, he trades the 15-minute chart, he's tight stops, but that's because he understands how price works and he's on side. Anyways, So we touch this 1 minute CSD. We get this 1 minute CSD here as well. Now this would be the first sign of us gonna move off this SMT. Price is fractal. We get a 1 minute CSD that will transfer into a 5 minute CSD, and then if a 5 minute looks like it's closed above, it could be a 15 minute wick CSD, blah blah. Just price is fractal. The first sign was this close above, because the whole time, even after we took those lows, we ran lower. So we would not be touching the chart until we see a close above after 9:39. So this didn't close above that, this didn't close above that, this didn't, and then we closed above here, making a 1 minute CSD. In a 5 minute chart, we can now go up. I mean, the 1 minute was kind of irrelevant, but you know, another 1 minute chart was our first sign. Now, if you look, obviously we've taken out lows. We got a 5 minute CSD. The 9:45 candle gives us our 5 minute CSD. MNQ. The 9:45 candle closes above the 5 minute CSD to set us up for the macro. So when we come into this macro, we already know. We already know that we are going higher. Now we've got these as easy targets, but we already know. As soon as we come into 9:50, the 5 minute chart sets up perfectly. This up close on the big 1 minute CSD, which would be a 5 minute CSD. This is a 1 minute CSD. Price is fractal. I could talk about this for ages. 9:50 macro time sets us up. So as soon as we enter macro time, we can literally buy up entries. Now, another reason, well, we can put one minute 5 minute call. I just got a phone call. So yeah, bullish reasons. ES took sell side, NQ didn't, bullish SMT. We get a 1 minute CSD, 5 minute CSD. We've got a target. Now if we just write down our confidences right here. Why has it got down? Right, trade tick list. Well, we can either call it a Judas swing into a PD array, or we can target like I have it on my phone. I don't know if you can see, you should be, because I wrote this last night. Oh, you can't see. So at the top it says 9:50 to 10:10, and then the other macro times. And then it says liquidity pool. I don't need that. I've written what it is. Have we got a liquidity pool taken? Yes. Yes, ES Tech. sell side, NQ, SMT. Yes. Have we got a target? Yes. Have we got a 1 minute entry? Now, this one is honestly optional. The 5 minute CSD would be enough. Now, the only problem with taking the 5 minute CSD would be that our stop loss would either have to go here with a target, well, minimum 50% upper quadrant buy side. It just ruins your RR. Now, I know you don't focus on R, but do at the same time, because if you are not winning, if you're not making more when you win than when you lose, you're not going to be profitable. So as soon as you get the 5 minute CSD, that's a confirmation to go on to the 1 minute time frame. Now, you could, if you don't feel comfortable doing that, you honestly could just put it below the 50%. So let's actually give another example of what we were saying earlier. We targeted, we just target the top of the gap right there, because that become an order block. I'll get into that. Getting ahead of myself. Yeah, what you can do if you just want a 5 minute CSD entry, you don't want to waste your time on the 1 minute. As long as your stop loss is below the 50%, you're good. Now, I'm going to transfer into what we were saying earlier on calculating our stop loss. So we want the micros. Well, yeah, we'd probably need micros for a 50k. If you had 100k, you'd probably use minis. But as we can see, each tick is 50 cents. We've got 134 ticks. So if we're going to get to this number, but I'll show you what to understand. This is always ticks, this is points. 134, we divide that by 4. We get 33.5. Now that's just because there's 4 ticks in a point. So anyways, what we'd need to do to work out our risk, we do 134 times 4. Well, not 4. The tick point, 50, 0.5. So the risk on this trade for one contract would be $67. Now, if you're on a 50k account, you're going to want to risk about 0.5% each trade. That's what I'm going to do. So 67, we can now take that number. If we want to risk 0.5%, we can then add 67. So that would be 2 contracts, would mean my risk is 134. If we add another 67, that's 3 contracts, so my risk is 200. And then if I wanted to add another 67, so 4 contracts, my risk would be about 0.5%. So for this trade, if I was to take this stop loss entry to risk 0.5%, I'd work out what one of my contracts would be worth with the tick amount. and then just add that to I want to risk. So you can work out the first one first, and then yeah. So always enter with just one con with, because really you want a micro, you're not gonna this is never going to be worth 0.5% on one micro. They're worth 50 cents each tick. So unless you've got a massive stop loss, you're not gonna you're not gonna blow your account. So pretty much to do your order, yeah, on a one micro, then work it out with how I've just shown you, and then just add more cons. Simple as that. Or just enter with one micro. It's your risk tolerance, but I'll probably trade with about 0.5% risk. So I would have put on either 3 cons and under risked a little bit, or I would have done 4 cons and risked like $70, $20 extra. So yeah, anyways, 30 minutes, damn, it's good to be back. I'm addicted to futures and learning futures. So yeah, anyways, yeah, like I said, you can have a 5-minute change in state of delivery entry. However, stop loss might be a bit big, especially when you're trading in precise times and you're trading this exact times with the same macros every single day. You know what you're doing. You're not really going to want to, have a massive stop loss if you know what you're doing. You want a safe stop loss, but not an overly safe stop loss, if that makes sense. So we can scale down to the 1 minute. So you can see we've got that CSD at the macro time. As you can see, the macro time, I suppose you could mark the opening. As you see, we move lower, power 3. Everything is fractal. Every single thing you learn about in trading is fractal. So anyways, as you can see, we've got a high, low, high, high. That's our breaker, that's our CSD. Where could our entries be? Well, we've got a fair value gap right there. This is personally the one that I showed to the guys on the Discord, the entry that I probably would have taken. So let me mark that same gap, but with our quadrants now. You can see we come down, tap into this bullish fair value gap. We've obviously inversed all of these. However, because we've got the CSD, because we've got the breaker, I'd feel pretty comfortable buying this gap. Now you could have had limits on the upper quadrant right there, because that's what ICT says. He always says you want to see, you don't want to see all of your fair value gap be repriced. So your stop loss could have either been below 50%, below the lower quadrant, or just at the wick of candle number 2. Now if we'd have done the wick candle number 2, we've got 102 ticks. If we go back 102 times 0.5, we're risking 51. Times that by 4 contracts, we're risking 204. We could even add a 5th contract on right there to risk 0.5%. So we'd have had 5 contracts on if we had a 102 tick stop loss. Why is this valid? Because we're buying up this fair value gap, and if it comes below the wick of the second candle, then our trade's invalid anyways. So yeah, you could either have it below 50%, below the lower quadrant, or just at the wick of candle 2. either one will do. Now targets, you could either target the upper quadrant, which has already been touched, so you wouldn't have even done that. You wouldn't have even had that as a target. You would have had this high, this swing high as a target, 932 swing high. You also could have had the upper quadrant or lower quadrant as a target. Now, don't know if that touches, but that looks very, very close. 975.50. And what is the high? No, so by a quarter tick, it doesn't touch. Yeah. Anyways, that probably would have scared a lot of people. Anyways, you could add it at the lower quadrant, could have at the full of that 3R. Could have had it at, let's have a look on the 15-minute. Personally, I just showed on my Discord, I just showed taking it to the upper quadrant, the final quadrant I'm in. However, you could add this buy side liquidity right there, and that would have given you 7R right there. So yeah, very, very nice longs for Nasdaq today. Let me actually reply to myself. Anyways, yeah, just chuck that in. So yeah, we had SMT at sell side liquidity. We got 5-minute CSD at macro time. Red had just a bullish fair value gap after a 5-minute CSD inside of the macro. We targeted the main objectives and it ran for buy side, which looks like, no, it's not. I was gonna say it looks like previous day high, but previous day high is up here. So yeah, that is today's price action. I waffled on a lot, but yeah, I'm obsessed with futures. I'm loving it, and yeah, just a quick one actually before we end. Do you want to actually okay, so let me just get this clear. I'll put it on the 15. You can get rid of all these drawings now. So what I just want to clear this up because I've been confused on it. Well, not confused, but saying it. Okay, so the ORG is mark up, closing price of yesterday's 16:14 p.m. candle New York time to $9.30. So that's the opening range gap. If it's 5 p.m. let's find out. So yesterday's new day opening gap would have been, I suppose we could mark up today's. So this is the close, this is the open, this is today's new day opening gap. Now, as you can see, we close here but open here. That shows close, wait, it's because I'm on a 15-minute chart. Yeah, it's because I'm on 15-minute. Also, what am I talking about? That's not the open. Close and open. That's what I'm bugging out. I was thinking, what, that ain't the open? Yeah, close and open. As you can see, price respects this a lot. I mean, if you trade Asia, then let me just, not even, that shit ran 5 minutes CST. That shit ran away, bro. Let's see. Yeah, I can't lie, you wouldn't have had no time to enter that, to be fair. You had a 1 minute CST right there. And would you look at that? Goes past that 50%, bang. So yeah, that's the new day opening gap. And then I'll show you what it will be. So if we look at, let's find 16:14. The close. The close is there, and when we open up at 9:30, if we open up here, then our gap will be up here. You can see right there. So I'll actually show you another day, so you can see that's how this works. If you don't have CME data, let's do Wednesdays. Okay, bet. Let's say we find 16:14 close, and then 9:30 the next day. This is today's price action, but open. That is our new opening range gap. As you can see, bang. So you don't need CME data to mark it out, but it obviously helps. So yeah, that was today's price action. About 47 minutes. It's crazy. If I don't know if I want to say too much, to be fair. Is that for, yeah, that's for literally today. This is today's new day opening up as well. So we're probably going to open up higher. Make this our new. Anyways, do I want to say too much? Okay, I'm just going to mark something up. You guys do your research. Go look at Blasian's channel. I'm just going to mark a little something. Alright, I'm not going to say nothing. That's the wrong way. I'm not going to say anything. But you just got to do your research. Well, there's two things actually. Well, this one you already know. 1050, 1110. Where was our buy side target? Okay, you can see. But also 1025 close, making this an order block. Yeah, I'm not going to see it too much, but yeah, we've gone over a lot of stuff in this one video. I'm probably going to chop it down a little bit. It's 2. Well, we literally started recording at 1. It's now almost 2. No, I do miss it, man. It's good to be back. It's peaceful, man. Just knowing like no one else is doing this. When you walk around the shops and that, no one else is doing this like us. Like even just applying the opening range gap. If that's all you learn from this video, that's still more than 99% of the people that you walk around. You should be proud of the work that you're doing, because no one that you probably know is doing this that's around you. Everyone that you walk past, they ain't doing that. They're working a 9 to 5 and there's nothing wrong with it. But you just got to realise that every day you're working towards a skill that no one will ever be able to take away from you. And I'm not saying I'm the greatest, I'm not saying I'm, anything. I'm just saying that I'm proud to be where I am. God's plans put me here, and we're going to put in this work, make God proud, and yeah. So let me wrap this video up. That was today's price action, and I'll see you guys in a bit. We've also got rid of the layout. We've just gone back to simple, That I tried something, but then I also just like, I don't know, man. I'd just rather keep it simple. Yeah, just keep it simple, to be honest. Ain't got to do too much. And yeah, the thumbnails, I'll probably just keep bland. And yeah, I'll see you guys in a bit. Peace.